on the team.
Thank you for. Thank you, Mr. Collins. Mr. Babatunde, please, are you here? Can you please introduce yourself? Mr. Babatunde, are you here? Mr. Olani, are you here? Okay, I guess he's not online now because he's not. I can see him online, but he's not saying anything. Can you unmute yourself and say something, Mr. Babatunde? Oh, shit. Can't find him again. Okay, very shortly, we're going to be starting. And once again, we apologize for starting this late. It's never in our hobby to start an event late. We really apologize for the space. It was beyond our power. So sorry. Okay, Mr. Babatunde. I can barely hear him, but he's online. So very shortly, we're going to be, the flow is very easy. This is what we do. And we want every SME to understand how tax works for their businesses. And so, in no particular order, I'm going to be calling one of the speakers to go first. You just have to speak on 10 minutes on the topic.
All right. Good morning, audience. Good morning, everyone. Esther, good morning. Indeed, the SME sector, SME industry is in Nigeria. So by way of definition, SMEs are companies who are businesses whose revenues, assets, or employees fall below a certain threshold. I mean, every country decides what they classify as, or who they classify as SMEs. In Nigeria, there are different categories of, or different classifications. So you have national policy on MSMEs, saying that SMEs in terms of employment size and, classifying SMEs in terms of employment size and asset value. So it says that if you have less than 10 employees, you would be a micro enterprise, and hopefully your asset is less than 5 million naira. And if your employees are between 10 to 49, you would be seen as a small enterprise, and your assets hopefully should be between 5 million and 15 million or thereabout. Then if you have between 50 to 1 or 200 employees, you will be seen as a medium enterprise, asset between 50 million and 500 million naira. I mean, that is what you see the national policy on MSMEs categorize MSMEs as. Then when you come to the tax law, which is the focus of today, there has been an introduction of SMEs in our tax laws. That had not always been the case until the Finance Act 2019. So what the Finance Act has done is to say that if you're a company whose gross turnover falls below 25 million naira, then you're a small company. Then if your turnover is between 25 million naira and 100 million naira, we're talking about annual turnover, then you're a medium-sized company. And then if your turnover is above 100 million naira, you would be seen as a large company. I mean, that is the law as of today. It would change because the tax reforms bill, which is in the works, hopes to increase this threshold so that we can have a lot of companies fall under the SMEs, so that it could reflect better the inflation rate in Nigeria and what the exchange rate has done to the value of our naira. So I'll move very quickly. So why is tax? Because the topic of today is understanding tax for SMEs. Why is tax compliance important for SMEs? For me, the first thing is legal protection and business continuity. So if you're an SME, if you do not properly register as a legal entity, and if you do not properly register similarly as a tax entity, you could face legal issues. I mean, you can imagine doing all the things you're doing, everybody knows your brand, and you're not properly incorporated as a structured entity or as a legal entity in Nigeria. Someone could just reap the benefits of all those things when they go incorporate using your brand name. That means you've lost all the protection. The other one is that as a tax compliant SME, you're able to have access to financial support. Um, in our firm for Vismaza, what we do a lot of tax advisory, tax due diligence for investors who are seeking to invest in startups, invest in SMEs in Nigeria. We do a lot of things for the World Bank. And then we see that um, some of these foreign investors, who they love what this company is doing, we love we love what they've planned to do, what they're already doing, so we want to invest so that we can scale the business. But after the due diligence, you see that the penalties for not having been compliant with the tax regulations in Nigeria would even outweigh the benefits the investors would earn in the first 1, 2, 3, 4, 5 years. Again, it's just penalties, not even the taxes, because a lot of exemptions are given to SMEs here in Nigeria. So you see, these companies who intended investing in the SMEs in Nigeria would withdraw their finance and support. So tax compliance is important because you need to have your tax clearance certificate and all that as an SME to attract relevant finance. Then business credibility, and again, tax incentives. The issue of tax incentives will be more emphasized with the reforms that has happened. If the SMEs have been privileged to look at the withholding tax regulations, that the new one that has been passed, which will be effective 1st January 2025, you would see that some of the incentives are tied to tax compliance. So if you're an SME and you're not registered, you would not be seen as an SME. So you need to register, you need to get into the pool for you to enjoy the tax incentives. And then participation in the formal economy, which is similar to what I've said earlier, and then avoidance of penalties. So what are the tax applicable to SMEs? When it comes to company income tax, as a small enterprise, as a small business, whose turnover is less than 25 million naira, you pay 0 CIT, and you also pay 0 education tax. If you're if you're a medium enterprise whose turnover ranges between 25 million and 100 million, you pay 20% of your profit before tax as income tax in Nigeria. If you're a large company, again, we're not talking about large companies there, then SMEs are also expected to pay personal income tax on income earned by their employees or people in their employment. So you pay personal income tax. It ranges between 7% and 24%, which is an effective tax rate of 19%. SMEs are also expected to comply with VAT. However, if you're a small enterprise whose turnover is less than 25 billion, you're exempt from value-added tax, and that enables you as an SME to sell more, to have, to become competitive in the market. Then the other taxes, the stamp duties, the capital gains tax. I mean, we are not probably going to go into the details of that, except there are specific questions about that. There are also tax incentives for companies labeled as startups under the Nigerian Startup Act 2022. And you want to move very quickly. And there are tax incentives for small and medium businesses in Nigeria too, under the Pioneer Status Incentives in Nigeria. So, I mean, that is that. So tax compliance tips for me, if you're an SME, you have to register your business first, which is the most important thing because you need to become a legal entity, a formal entity in Nigeria. One of the mistakes SMEs make is not appropriately assessing and evaluating how they should be formed as a business. What should you be? Should you be a limited liability company? Should you be an enterprise? Should you be a PLC? I mean, if you want to be a PLC, but should you be a partnership and all of that? So these are at the formation stage. So you need the lawyers, you need the tax advisors to tell you, to evaluate your plans, your business plan. Where should you be to get the best or the optimum tax advantage? Is it better to be a limited liability company because this could have tax consequences? Then record keeping, you need to keep your records appropriately because if you do not keep records, you allow the tax authority to make certain assumptions because somehow they need to work with something. Then there are tax incentives. I already talked about that. You need to engage your tax advisors. You need to engage your business advisors to advise you on relevant tax incentives that apply to the kind of business you do as an SME. Then always do not neglect professional assistance. Thank you very much.
Thank you so much, Mr. Peter. I have a lot of questions for you, but that'll be after the session. But I noticed that a lot of SMEs, they refuse to register their business because I think they don't really understand that it is until you get a certain amount that you're supposed to pay tax, right? So, because I know of someone that registered her business and she started using a company's account, all of a sudden she said she's not using that again, that because of the taxes she's getting is too much, that she doesn't want to use it. So she'll just use her personal account. And so, but I will come back to you on that. Mr. Collins, can we hear from you, please? Thank you so much once again, Mr. Peter. So, Mr. Collins, please let's
Yes.
hear from you
All
what
right.
you have
Thank you
to
very
say.
much. So, I mean, I'll just pick it up from what you have said. Most of all these SMEs don't even know that if they have a turnover of lower than 25 million, they are kind of exempted from taxes. So they can actually incorporate their business and continue to run the business until they grow. So some of them use their personal accounts to do the business. But the challenge is when they want to grow, when they want to scale, when they want to grow, when they want to scale, they now realize that they have challenges with, for example, getting a facility from the bank.
Mr.
Yeah,
Collins, okay, we can see you
they have
now.
a challenge with getting facility from the bank. They have a challenge with doing so many things because they don't have records of what they've been doing since. They've been using their personal accounts to run the business, which has also commingled with their personal business. So they're unable to separate the business from the person, which makes it harder for them to grow, makes it harder for them to get past it. Even something as low as something as simple as allowing your creditors, owing your suppliers, they're unable to do that. So one of the benefits of complying with taxes is you have adequate records which you can show proof of what you've been able to do as a business, and it will also help you grow in the future. So just to add from the business side, I know the previous speaker has spoken more about compliance and all that. It's very key that businesses comply with taxes because you can't, and the funny thing is compliance is not that hard. These days, technology have made things very easy for us. If you just have, there are a lot of off-the-shelf software, SaaS software that you can use that would also help you do your bookkeeping and also help you calculate your taxes. For example, what are the taxes that you're liable for based on the turnover? You can set the VAT to 7.5%, which just calculates your VAT automatically for you. If you have employees, you can register them with payee. Lagos, the different states, Lagos State and most states today have their whatever online. You can easily go online and do all the registration without human intervention. You can always do that and register your employees and pay your pension, get your tax clearance easily. Because if you don't do that today, most of the challenge I've seen is most people incorporate their businesses and start running the business 1 year, no tax issue. Second year, no tax issue. And the third or fourth year, they just get a letter from revenue services saying you're owing social amount of tax. Again, just like my previous speaker has said, if you don't have a record, you're allowing the internal revenue service use estimates to decide what taxes you should pay. So one of the benefits of complying from the get-go is when they come to you, you are ready for them, other than them coming to you, putting you on a disadvantaged position where you have to start begging them on, oh, I don't have this, and I don't have money to pay, I don't have whatever to pay. So the benefit of this is that you start your business, incorporate a company, either limited liability, partnership, whatever you want to do. And from the beginning of the business, you start planning for taxes. When you're planning your cash flow, know that every revenue you make, some belong to you, some belong to the government. If you do this from the beginning, it's going to save you a lot of stress at some point in the future. Because I have a lot of friends coming to me and say, oh, I just got this letter from FIRS. What do I do? You have not registered for taxes. You have not been paying taxes. You can't hide under the radar for too long, except you don't want to grow your business. As long as you have plans to grow your business, you will definitely get into the radar and they will come for you. So the best way is from the beginning, make sure you comply with all your taxes, register for the taxes, start paying, no matter how little, make sure you start complying, make sure you start paying. And truthfully, for most small businesses, the tax burden is not so much. You'll find out that it's not a big deal at the end of the day. The cost of non-compliance is more than the cost of complying for the taxes. I think I'll leave it at this. Thank you.
Lens. I guess a lot of SMEs don't know that the cost of non-compliance is higher than the cost of compliance. Thank you so much. I have some questions for you, but that will be after the session. Mr. Uyi, can we hear from you, please?
I think that the two previous speakers, Peter and Collins, have said it all. If I'm to adopt the practice in the legal profession, in appellate courts, when the judge that's reading the lead judgment finishes reading and the other judges agree, what they say is, "Oh, I've had the privilege of listening to the judgment of my learned brother, and I concur." So I think that's all I would say. I concur. Anyway, but for the benefit of the audience and a bit of an insight from someone who has extensive legal experience, I just want to share a couple of things. I think that the most important thing in determining your tax liability is having clarity as to the kind of structure that you need as you build your entity. And I think that's where many SMEs get it wrong. They have a problematic foundation. And so a lot of them end up, trying to fix that problem as against building on the right foundation. So, for instance, let me explain. You have people who choose, for instance, the business name route, right? Business name registration, because it's easy and more affordable, not because it fits into the objective of the business, not because it is the most suitable for them to use. And so what happens is that as they get along the line, they begin to have those challenges, tax issues start popping up. And what the experts have not said to us, and I'm sure they will say it at some point in time, is that, we find more often than not now that people, business owners register business name companies in order to evade corporate tax liabilities. And then they end up forgetting that those liabilities will come to you in your personal capacity in one shade or form or the other. Because as a business owner, if you have a business name, you are also obligated to pay personal income tax, right? I think Peter will tell us self-assessment. There's the self-assessment rules and the likes. And with the deployment of artificial intelligence and with the deployment of technology in managing the effectiveness of our tax framework, it will be very difficult for you to evade proper taxes as time goes on. So what's the solution? Building on the right foundation. And that's why the beginning of every conversation for every business owner is getting clarity. Clarity as to your direction, clarity as to the kind of structure you need, clarity as to the financial implications of your actions, right? And for the business that you are seeking to build. So, for instance, I know that there's something called tax avoidance, and then there's something called tax evasion, right? Tax avoidance is not illegal. Tax avoidance just says you are building your framework in a manner that mitigates your tax obligation to the barest minimum. And tax evasion is that you are evading, you're running from paying your legal obligation. We find oftentimes that more entities are leaning towards the latter, not from a place of disobedience, so to speak, but from a place of limited understanding, limited knowledge of what the issues are. So how do you navigate these things? First of all, curate your structure properly. Start with the right registration. And when people say, oh, the taxes are too much and I don't want to register, it gets a bit, it's a bit confusing because tax is on profit. And oftentimes we try to look more at the turnover as against, if you're not profitable, for instance, you're not paying CIT, right? Because you have not made profit. All you need to do is understand the proper framework, right? And build based on that framework. Many of the tax obligations that end up becoming penalties are a failure of business owners in complying with statutory requirements, filing your VAT returns, paying your one-off tax obligations, things like education tax at the state level, business premises tax, and all that. A lot of these things are one-off, right? And then the recurrent ones have clear framework arrangements. Today, there's a lot of automation. I know that LIRS, for instance, has an online system where you can even file your tax monthly returns and file all that you need to file yourself. But it's always better to work with professionals, right? So if you look at the cost it will take you to resolve tax challenges, it is way lesser. And I think it was Collins that said it, right? That the cost of failing to do the right thing is more expensive than doing the right thing. Getting a professional at the onset and saying, look, let's file our tax returns as at when due. Let's do all the relevant payments, and you put them on a small fee. What happens is that you would be on the good side of the law, and you find that your tax obligation is not as much, because we often view tax from a place of, oh, punitive amounts, punishment, and all that, because we look at the fines. So for instance, let's even look beyond tax. Let's look at your annual filings at the Corporate Affairs Commission. It's basically like 5,000 naira. And in fact, for business names, I think 3,000 naira. But the penalties are a lot more, right? And so when you now fail to do it, and then it accumulates, and then the company is marked inactive, and then you find that, oh, they now start going, you now need professionals. And so what you could have paid a simple 5,000 or 3,000 per year for, you're having to pay almost 20,000 or 25,000 per year for the same thing, because you did not act when you should have. So the most important element beyond getting clarity for every SME owner is to understand your timelines. Understand the timelines and the requirements for each of these obligations. Meet those timelines. Try not to miss them. And then you're home and dry. Now, let's also look at structure. In getting clarity, the first question is, what structure will enable me achieve the objective for which I've set out to run my business? The second question will now be, how do I curate this structure in a way that ensures that I don't run foul of the law, but I also mitigate to the barest minimum whatever responsibilities, obligations I have? And so this comes from even the level of employment, the inflows you allow into your account. So what happens oftentimes, and if you speak to 10 SME owners, they will tell you that you have a corporate account. There's one uncle somewhere that's bidding for contracts. Please send me your company name. Let me just do the, and then you send, they pay huge amounts of money into the account. You use your account as a conduit, so to speak, for family and friends to do stuff. You commingle with your own resources. And so at the end of the year, when you're looking at the turnover, there's a long sheet. The figures are high. And then comparing them to tax, they're not adding up. And then the question now is, you're not having to explain all this. Forgetting that if you had run your account as you should have, and you had documented properly, you probably would not have those challenges, right? Because those are the things that shore up and buffer up, your turnovers. And then at the end of the day, it's looking as if, you have a lot of tax obligations. Another very important thing to keep at the back of your mind is oftentimes even the internal structures that these entities carry out. What's your employment framework? How are you paying your employees? Are you filing the right? Are you following the right procedures in payment of salaries and all that? So if you view doing the right thing and flowing through those systems at the onset, so all you're doing is you're building on the right foundation. And as you build on the right foundation, what happens is that when these challenges come, they are like a walk in the park, because you have structured your business around those lines. And really, for every business owner, you're going into the market to sell a product or sell a service. You're prepared for the challenges that selling that product brings, right? You're prepared to navigate the nuances of, ensuring that your product is bought by more people. The same energy should be given to ensuring that you meet your statutory obligations. And I think that until business owners begin to look at statutory obligations, things like tax, things like their returns, as pivotal to their business growth and not the performance of obligations that they owe government or that government wants to take from them, we'll continue to have these challenges. Government also has its role to play, which is ensuring that people see the value for the taxes that are collected from them. And I think that oftentimes disobedience, stems from a place of people not seeing the value that, that is gotten from the taxes that they are paying, right? But the truth remains that it's a statutory obligation. And they say there are two things that are as sure as night and day, debt and taxes, right? And so people must learn that taxes are a pivotal aspect of running your business. You get clarity at the onset. Work with professionals who will guide you in a way that mitigates your tax burden. You build and create your structure, around ensuring that your tax obligations are reduced. And, I'm in technology and innovation, right? And one of the things that we say to startup founders as you build your business is leverage heavily on technology, right? So if you buy a software and you're using a software to provide a service, in your supply chain, work supply chain, you're not paying tax for that software. You're not paying pay. You're not paying anything, right? But when you employ people, beyond the salaries you pay them, you also owe the state something. There are obligations around these things. And so you must also look at your obligations from that point of view, right? And now this is not to say, because someone will say, we're trying to bridge the unemployment gap. Yes, we're trying to bridge the unemployment gap. But you as a business owner must understand that working lean, especially in the formative years, is extremely important. Leveraging technology and tech tools and mitigating the number of people you employ, is also part of the ways that you can, balance your tax obligations. Because what we have, especially for many of the SMEs and businesses in the semi-formal and informal sectors, is that there are no statutory obligations for employees. Most of these employees even receive salaries by hand. At the end of the month, you just go to the cashier, they will count one money, give you, you sign for it and go. Some of them just receive alerts from their employers, and all that. Some don't even get paid, so to speak. But at the end of the day, when these businesses now need to scale and grow, these are the things that come back to haunt them. So I think I'll stop here and let others speak. Thank you.
We've learned a lot from you, so we have our questions, but after this. Mr. Babatunde, please, are you on ground? If you're here, please let's signify by just lifting your hand and saying something.
Hi, hello, I'm here.
Oh, finally. Please, can you put your video on so we can see you? Thank you, Mr. Babatunde. So first of all, when others were introducing, we couldn't see you. So just introduce yourself and dive straight in. You have 10 minutes. The floor is yours.
Yeah, thank you very much, Esther. Good morning, all. My name is Babatunde Olani, and I'm the director with PricewaterhouseCoopers, PwC, one of the big four firms. And I've been advising tax for over 13 years within Nigeria and the UK. Right, and thank you, BusinessDay, for the opportunity to share my thoughts on this subject matter. And as the previous speaker said, a lot of the previous speakers have touched on salient points around SME and the tax obligations in Nigeria. To the extent that even as I was thinking through what I was going to say, right, I was finding it very difficult to find what's something new I can say, right, beyond what has been said so far, right? But I'll do my best to share some additional insights from the tax and also non-tax standpoint, right? So I think the first thing I want to say is SMEs are operating in a unique environment, a globalized world right now, that is also facing some mega trends, right? So first and foremost is the whole technological disruptions and things like that. And we're seeing SMEs leverage on new technologies, right, to expand their markets beyond their local area, or sometimes even cross border. And all these things attract tax consequences, particularly because you are going carrying out transactions beyond your immediate territory to another territory, right? So you then see the possibilities of having multiple tax laws applying to yourself, right? Based on the legal structure and you have in place, either it is through a sole proprietorship or a partnership or a limited liability company, as the case may be. One of the things that I wanted to highlight is SMEs continue to play a very big role in terms of economic prosperity and growth, right? So from a fiscal and tax standpoint, that's a segment of the economy that cannot be ignored, right? And if that is ignored, that's to the peril of the particular country, right? And we've seen from the notion of the incoming, the new government and what they've done over the past over a year now, right? Around the taxes as well. If you look at the Presidential Fiscal Policy and Tax Reform Committee headed by Taiwo, right? A lot of the promotes a lot of the new tax bills are targeted towards making life a bit easier for SMEs, even though the cost of doing business in Nigeria is extremely tough. There is statistics that says that I think over 2022 or 2023, right, over 300 manufacturers, right, got liquidated, right, pretty much just went out of business, right? Even as a professional service provider, one of the things we've seen increased demand on, right, is liquidation services. So it means that despite the huge prospects that the Nigerian economy has, SMEs, right, are really having it very difficult from the cost of doing business standpoint. The perspective I also wanted to add is most entrepreneurs, we know their immediate focus is survival, given the statistics that a lot of the businesses fold within the first 5 years, right? So a lot of the drive of entrepreneurs is to ensure their business idea survives, right? So tax is ordinarily not front center, right? At the initial stage when you're trying to get your project seeking for funding, employing the right people, engaging your customers, ensuring that your customer engagement channels are optimal. Tax is really not at the forefront of the minds of the entrepreneurs, right? And that is understandable, right? But I think as the market continues to evolve, right, where at some point in time, these entrepreneurs have grown their business and at the point now whereby they need to scale, right? They're not having interactions with sophisticated investors who are now making requests in terms of understanding their structures and trying how are they compliant, right, with the laws within Nigeria, which then includes taxes, right? So we then find out they're not doing some remediation, right, to bring their books up to order and also bring their compliance status to where it should be, right? The other thing that we've seen companies do, right, is to treat taxes like any other cost in the business, right? So you see entrepreneurs focusing on either the cost of salaries or the cost of power, either fuel or diesel, or as case may be, even interest cost on finance, right? We've seen organizations, and this can actually move nicely into SMEs, treat taxes like any other cost in the business, right? So when they're doing their cost optimization strategies, right, their approach for tax as well is also placed right front and center. Now, if you look at yourself as a business or an SME, right, who has aspirations of growing, it means at some point in time, right, you would exceed the safe harbor provisions of threshold where you need to start to pay tax, right? So currently, as the first speaker said, the threshold is 25 million. With the new finance bill, looking to increase that to 50 million, right? And then move to a 20% income tax bracket, and you go above 100 million currently, which is moving to 150, right? Then move to 30%. Now, if there is any cost that is taking 20% to 30% of the profits, right, that requires a lot more attention, right? Similar to other costs that you have in your business. So it means that from a strategic standpoint, a lot of attention needs to be placed around that to ensure that you optimize, right? And how do you optimize? Number one is by staying compliant, right? So that you don't have to incur any other taxes that you could have avoided by staying compliant in the first place. Now, the second one is taking advantage of tax incentives, right? As one of the speakers said, you really don't know have to have the knowledge, you just not see the people that have the knowledge, right? That can support it safely. These are incentives that you can enjoy. That will definitely bring down your taxes and would actually still be within the laws of the land, right? Ensuring that you're playing around tax avoidance landscape rather than tax evasion landscape. So even though the tax morale in Nigeria is low, given that the social contract is broken and government is not even utilizing the taxes that they're generating optimally, right? The NESG did the research and came up with statistics that a lot of people have very huge tax morale, and a lot of people don't actually think evading tax is a bad thing. But one of the things that we've seen organizations do as well, which can translate nicely into the SME bracket as well, right, is to be proactive when it comes to their tax affairs rather than being reactive, right? A lot of these big organizations do what we call tax advocacy, right? So they look at the tax laws, they look at the laws that are giving them the most pain, right? And they try to leverage on relationships with the government, right, to influence, right, to make suggested changes, right, to those tax laws. Now, where the small and medium scale enterprises might not have the same political clout, right, or social clout as a single entity, right, they can leverage on associations, right, either within the industry groups or within the small and medium scale associations, SMEs and other organizations to engage the government, right, as a union, right, and actually seek for targeted tax incentives that will lead to favorable tax outcomes that would encourage small and business scale enterprise to be more profitable, right, to expand, which will ultimately benefits the entire country as a whole. I think at this point, I'll just stop here. I'm happy to take any questions.
Thank you so much, Mr. Babatunde. Really, that was really nice. So thank you to all the speakers. Very shortly, we're going to be diving into the session of questions and answers. But before then, I would like to ask each speaker to quickly tell me, is there an awareness program for SMEs to know that there's a certain amount of profit you should make before you can pay tax, and how do they really fight for their tax? Because a lot of SMEs don't know this, and because I see a lot of people saying giving you buying something and they're giving you personal account, and you ask them, they'll be like, oh no, I don't have money to pay for tax, so this that. So I really want to know, is there an awareness program or something that makes all this SME aware of, okay, you can't pay, you don't pay for tax until this certain amount is being made, or because I really want to understand, because I know a lot of SMEs want to hear that too. So who is going first? Who wants to go first?
Yeah, so I can, since I'm the last speaker, I can take a step at it, and other speakers can jump in as case may be. Right. So one of the things we would say is ignorance of the law is not an excuse, right? So there are tax laws that place compliance obligations on SMEs, right? So even though the income profits that they're making are exempted, if you are earning below 25 million, right, if you're earning above 25 million, you have to pay tax of 20%. If you don't have any tax incentive that is exempting your profits, you still have compliance obligations in terms of filing returns, right? So there is the self-responsibility as a business person operating in an environment that has laws, you acclimatize yourself with what your compliance obligations are, right, as stated in the law, right? So that's the first obligation is on the SME themselves, right, to get acclimatized with the requirements of the law to comply. So they need to do the work themselves. On the other hand, as well, there is the player around the government through the tax authorities, right? So the tax authorities have also understood that there is a gap as well in awareness, right? And this has led to some of the tax evasion, tax illegalities that are happening, right? So they've created some tax awareness, tax education programs that are funded by the government, looking to educate the different segments of taxpayers, right from the market people that might be not so literate, to the corporate taxpayers, to even down to students, right? So there are investments that are happening in that sector, through the tax authorities looking to inform SMEs and other taxpayers of their responsibilities. Thank you.
Much, Mr. Babatunde. Thank you so much, Mr. Babatunde. So, Mr. Peter, would you like to answer this?
Right, so thank you, Babatunde. Babatunde has said something very important, and that is that if you're operating in an environment that has laws, one of the first things to do is to ask questions. So you need to understand the laws, because I'm certain that if any of us travels out of Nigeria, we don't do things however we want to do them, because you understand that there are laws there. And like you rightly said, the tax authority understands that there is a cap. Aside the things he has mentioned, if you go to, for instance, if you're dealing with the Federal Revenue Service, they have what they call Taxpayer Service Desk, so TPS. So if you go in there, it's the section, a small unit where you can ask all the questions you can ask. When you go there, you'd even see in some of the offices, you would see pamphlets, you would see brochures that has a lot of frequently asked questions. And then very good, we have Business Day. I know Business Day organizes sections like this, and it's an annual event, if as much as I understand. So SMEs should try to work in blocks. So if you're one of the minorities, not a minority per se, but I think if you're a startup, because your SMEs are not minority, if you look at what they do collectively and the number, but if you're not individually contributing a huge chunk of revenue to the government, you need to come together as a pressure group, if that is a proper phrase to use, and understand when laws are made that would affect your businesses. So that's what I can say.
Thank you so much, Mr. Peter. Mr. Collins, would you like to share an idea on this?
Yes. Okay, sorry, you said an idea on which one? Oh, my camera.
Oh, we said, is there an awareness program for SMEs to know about tax and when they're supposed to file for tax?
Well, the truth is, we're in a digital world today, and every information you need is at your fingertips. If you pick your phone and you type Google, when should I pay VAT, it will tell you. And when should I file for pay for payee for my employees, it will tell you. So just like the previous speaker said, it's the onus is on everyone to make that effort, because ignorance is never an excuse in the eyes of the law. So nobody's going to, the information is not going to come to you. What you guys are doing here is one way for people to get aware of what they need to do. So they can, my point is, you need to make that effort to get that information. The information would not come to you, because if it comes to you freely, you can just junk it. So if you run a business, you need to know that, okay, which taxes am I supposed to pay? You can even speak to a friend that is in finance or tax without even paying, just a phone call or just a chit chat. Oh, I just had a business, what taxes are due? You can go to ChatGPT, you can use technology, you can just, there are various ways you can get that information. The onus is on you, the business owner, to make the efforts to understand the environment you're operating. You understand?
Thank
So
you
the
so
onus
much.
is on you. Yes, you can't rely on anybody, because if you go against the law, you won't have any excuse. Yeah, you can't say I didn't know. You have to pay the fine or the penalty. Yeah.
Thank you so much, Mr. Collins.
You're welcome.
Mr. Uyi. Mr. Uyi, are you here?
Yes, I am. Sorry. My network has been kind of funny, but I'm here.
Okay, so I was saying, is there an awareness program that SMEs needs to know on when to pay for tax, when how to file for their tax? Because most of them are really not aware about these things.
So let me put it this way, right? And I'll be very blunt.
The video is not showing.
Yes, my network is quite cramped. In fact, I have to change.
Okay.
Let me just a second. So I'll be very honest with you, right? So when people ask this question about whether there's an awareness program, who tells you about how you make profit? Who tells you about, your branding, social media? Why do people always feel like someone has to pull you in to teach you what your statutory obligations are, but nobody's teaching you how you are making the money, how you are, profiting off your business, right? So I think that business owners must now learn to put their money where your mouth is. You have no business running a sustainable, emphasis on the word sustainable business, if you don't have professionals that you're working with on retainers. And Collins had just said, that there's internet, there's ChatGPT, you can ask these questions and stay. And listen, you're just a Google away from at least 20% answer. Professionals will help you flesh it out and give a bit more clarity, right? But at least you'll even know what your obligations are, and then possibly how to go about it. And then two, listen, you could walk into FIRS office. They have offices everywhere, and ask questions. Oh, I'm running this business. I need to know what I need to do. And somebody there will attend to you and answer your question. Right? So enough of this push for awareness programs. They don't know what to do. They don't know. We talk so much, right? I've been on Business Day, this webinar many times, right? Yeah. And look at the insights and the experts you've put together. Now, imagine if the topic was different, how to make your first 10 million naira in 20 days. I'm sure you will have overcapacity. Sure. People are just not interested. So it's not about, listen, we can do 1,000 awareness programs. People are not interested in compliance. And we that are in the professional service industry will tell you that the bulk of the clients come from when it's now on their neck and they have to, maybe they are looking for a bid or they're looking for certain things, or investors are asking those questions. They now start running around to put together a compliance framework. But the few that start right, for instance, you have free, I use this word for want of better language, right? You have six months free period when you register your company. The law gives you 6 months for tax. Corporate Affairs Commission gives you 18 months. And these are what we call baby step periods. They expect that this is when you will be faltering, you will need time to plan yourself and all that. Great. After that, what next? You now start fulfilling your obligations. So you even have time to plan. You have time to plan. You have time to do what is expected of you. And then you also have, right, those that are smart enough to register. There's a way you can time your registration. At the point of registration and registration on Tax Pro Max, you can also apply for an initial tax clearance, which is a starting point. And then you file your VAT returns. Even if they are zero returns, you file them as at when due. So I don't want us to talk about awareness program. I want us to talk about people learning to put their money where their mouth is. If you want to build a sustainable business, go and look for the information, right? Listen to past editions of this webinar, Google search engine, and check check, ask questions. And it doesn't have to, you don't have to even type it right. Just type it the way you are thinking it in your head. And somehow an answer will come, a response that will give you some measure of clarity. There are lawyers everywhere. There are accountants everywhere. Send one a message, send the DM, send the message, right? Ask questions and ask again and keep asking. Pay a little fee. We like free stuff, and that's the problem. But you see, when they say we like free stuff, we also don't value things that we get for free. So it's a contradiction. If you get a professional who sits with you for 1 hour and gives you clarity and you did not pay for it, half of the things he said you will not remember. But if you paid a premium to sit with him, if it's for 1 hour, if he leaves at 59 minutes, say, no, sorry, I have 1 minute left. You want to get full value for your money, you note everything down, and then because you have spent money. Yeah. So we realize that giving freebies to SMEs are not helping them because they don't value it. And they just queue them up and prepare for the next freebie. But those that spend their resources, pay accountants, pay professionals, go and ask them. They're seeing the value and they are milking that value to the maximum.
Thank you so much, Mr. Uye. So right now we'll be diving into the session of questions. Right now we'll be diving into the session of question and answer. So I'll be asking each speakers different questions. So I'll start with you, Mr. Peter. You talked about compliance a lot. So I want to know, and I want the SMEs to know, what are the most common tax compliance challenges faced by SMEs?
Okay. I think the first thing is, because compliance, when it comes to tax, is based on facts, based on records. I think the first compliance challenge they face is putting their records together, because that's where you build from, right? So SMEs, most times, when we were speaking, a lot of times SMEs are focused on profits. I mean, sometimes you can try to understand it because you have to survive, you have to make a little fund, you have to make some profits to retain someone. But other times, after the 6 months, the baby steps you talked about, it becomes unexplainable because at the end of the day, the penalties may not make sense. So it may not make sense to you as an SME. So I think the first thing is putting their records together. So SMEs must invest as a matter of urgency in getting appropriate accountants or tools, maybe accounting tools, that can help them put their records together so that at every call from the tax authority saying, hey, yeah, you're supposed to pay this tax on this profit, you already have an idea of whether you've made profit or you're even making loss in the first place. So I think that is the first issue SMEs are, challenge the SMEs have. The second challenge is SMEs do not really try to keep abreast with changes in the tax law. So when things change, again, that is because they do not retain professionals. So when things change, you see that they keep doing the old things. I remember back then when the Personal Income Tax Act was amended in 2011, people, as late as 2016, we had companies who were using the old personal income tax rate. It didn't make sense. And funnily, some of them were paying more because it introduced reliefs. The 2011 Act introduced reliefs, Amendment Act introduced reliefs, and these people were still paying, especially for SMEs who had people they were paying below the minimum wage. So SMEs must invest in knowing about the compliance requirement, the regulatory requirements of their business, whether from using ChatGPT, using Google, getting qualified professionals on retainership. So these are the two things I can talk to or speak to at the moment. Thank you.
Thank you so much, Mr. Peter. I noticed one problem SMEs have is they don't even have the time to go on social media to check what they want to check. They're just there thinking about how to make profit. So why would I be spending my time going on Google searching what are the tax compliances I have to do while they are there thinking of how to make money? So I think they need to invest more time in learning about those things. Thank you so much, Mr. Peter. So I'm going to ask you, Mr. Collins, how can SMEs manage taxes during periods of rapid growth?
Okay, so one key thing about taxes is record keeping. You can't take that away. I mean, even if you don't pay the taxes, make sure you keep the record. Because like someone mentioned earlier, if you don't have good records, you leave the revenue authorities no option other than to use an estimate. And that may not be the best for you. They will just say companies of this type do this amount every month, and based on that, we'll fine you or we'll levy you a tax of this amount. You may be doing lower, you may be doing more. So one thing is very critical in every business, make sure you keep records. In everything you do, as you grow, as you scale, don't get carried away. Make sure you keep, even if you don't have time to do the right thing, make sure you do record. How can you keep record? Something as simple as getting the right accounting software to record your transactions and open a file, even if it's a paper file or a soft copy file for all your invoices, and keep them. So that if you have to go back, you can make reference, because you won't remember who paid you money 2 years ago. You won't remember who you paid money 3 years ago. So the key is ensuring that you have good record keeping. There are very easy ways to do this. You can hire a part-time accountant. If you can't afford a full-time accountant, you can hire someone on a part-time basis to help you keep your records. You can come in once a week, take what you have done. There are a lot of accounting firms that offer that services. There are a lot of them that I know. They'll come in once a week, take all your records, record it, get a simple software, put it on the software, upload all the support for you. Whenever you want to make reference, you can always go back and make reference. So as you grow, ensure that you don't pay lip service to record keeping. You must keep good financial records, because tomorrow when they come to ask you questions, the law requires you to keep your records for this 6 or 7 years. So you don't have any excuse not to keep your records over the last 7 years. So that's my advice to every SME as they grow. Make sure you keep records, good, accurate
Thank you so
records.
much,
Yeah,
Mr.
thank you.
Collins. I know a lot of SMEs find it difficult to keep records. Like,
Yes.
I know that for sure. They don't keep their records because you tell somebody, okay, I paid you something last week. They'll be like, oh, I can't find the invoice. So I think
Exactly.
SMEs, you need to keep your records. Mr. Collins has spoken. You
Mhm.
people, SMEs, please and please start keeping your records from henceforth. Thank you so much, Mr. Collins.
Yeah,
Mr.
well,
Uyi, my next question is for you. You've talked about a lot of structure. They should put their mouth. You said they should put their mouth. How did you say that? They should
Their
put their
money.
mouth.
Put your money where your mouth is.
Put your money where your mouth is. I think I like that. So how can SMEs determine the appropriate tax structure for their businesses?
It's not for them to determine. They're to work with professionals who will give them advice. So what they need to do.
Mr. Uyi, hold on. You know, some SMEs cannot afford you guys. You are expensive.
So that's the problem. So that's the problem. It's not about affording. So let's be very basic, right? There are lawyers at every level.
Sure.
There are accountants at every level. Yes, there's a base fee, right? But I don't believe that these professional services are not affordable. I'll tell you, for instance, it's just, would you say in a block of shops, right? A shopping complex, SMEs want to lease a shopping complex, and you say, oh, business, we know we can't afford this rent, so give us this place for free. No. Or you know what? Let me go to please, with respect to anybody that's living in Ikorodu, but let me go to Ikorodu instead of staying in Allen Avenue to sell my products, because Ikorodu is cheaper. Meanwhile, your market is in Ikeja on Allen. It's not about whether it's affordable or not. It's about what is important to run your business. Yes, you can negotiate a premium, and oftentimes you find that professionals are really heavily invested in the growth of the business and are happy to support you So every entity, even my law firm, we have packages for SMEs. I wouldn't charge large corporates the same amount that we charge SMEs.
Okay.
And if you talk to the guys at PwC, at Mazars, they'll tell you the same thing. There are small packages factoring in the peculiarities of these small businesses. So look for these entities, work with them based on your budget, and they'll give you foundational advice. It's very important. It's as important as you buying equipment for your business. This foundational advice, and then they can guide you in such a way that you can now grow to be able to try to do some of those things. For instance, you engage a accounting firm. They file your returns. They do it for maybe a year. They teach you. And before you know it, you can have somebody on your team file those returns. And then you only pay these professionals maybe on specific assignments where you meet brick walls. But expecting that, oh, we'll get it free. No. Did you buy your equipment free? No. Did you rent your business premises free? No. Right? So you have, for instance, apps are being developed, websites are being created. You know, there's so much. SMEs fixate heavily on branding. Brand. They pay lots of money for this branding. And then you come, I sat down with a startup founder, and he wanted legal services and all that. And I said, oh, great. So this is our SME package, very reasonable. So I don't have money. I spent so much. I spent almost $20,000 on building this app. I said, okay, let's do the maths. Convert it by 1,000. Then it was about 1,000 naira to $1. Right? So you spend about 20 million naira building your app, but you cannot spend 10% or even 5% or even 2.5% of that on legal services to help tie in your structure. So it's just about misplaced priorities and not prioritizing professional services. So one of the things that I have done of recent is to begin to change the narrative and conversation around provision of professional services. Professional services are just as important as that app, as that business store, as that machine you're buying for your business, as everything you're doing. So if you don't prioritize it, then you snooze, you lose, right? So that's one. Two, there are softwares today. There are accounting softwares. There are even templates that businesses can use. But I'll put a caveat. AI is not failure-proof. AI also does not contextualize your realities. If, for instance, you tell ChatGPT to draft an MOU for you, ChatGPT will draft that MOU for you. But here's what's going to happen. It's a large language model. It's garbage in, garbage out. It will give you certain things that you can use, but it will not be contextualized to your realities. Okay. When disputes happen, it is the contextualization of the document that helps people resolve their disputes. So that's another challenge. Okay. But you see to the professional, he notes all these things down and gives you a fit for purpose bespoke document. Same thing for accounting. So the accounting softwares, plug in, plug out, it gives you everything. Yeah. But what happens when there are certain variations? What happens when these mistakes happen? What happens when certain unanticipated issues come up? Is this technology able to contextualize those and still provide you bespoke solutions? More often than not, the answer is no. So you still come back to the nitty-gritty of the issue. You need to work with human beings, at least at the onset. Getting clarity is the most fundamental aspect of building a successful business. Anybody can build, right? And it's just like you building you want to build a six flat building, right? And you are laying the foundation. And then you lay the foundation for a bungalow. Definitely, as you try to build that 6 flat, it will collapse because you haven't laid the right foundation. If you start with a civil engineer to say, I want to build 6 flats, I don't have the resources now for 6 flats, but in the next 2 years I will. Right now, what do I need to do? He'll say to you, okay, no problem. Let the foundation be for 6 flats. You can start with 1 flat and then just be decking it as you go, but you've laid the right foundation. But if you did that, if you took that decision on your own, you probably say, oh, I can afford a bungalow. Let me just build a bungalow. When I want to build 6 flats, I'll remove the roof and just be topping up, because that's what I see people do, forgetting that the foundational work is integral to the entire building.
Thank you so much, Mr. Uyi. SMEs, you've heard, professional services is as important as branding. So don't just continue with only branding. You need advice from a legal professional. And you see, there are prices for everybody. They will not charge you the same way they would charge a big company. So reach out to any of them after this, and they will get back to you on what you need to do. So my next question goes to Mr. Babatunde. Mr. Babatunde, I would ask you, what are the fundamental tax obligations for SMEs in Nigeria? Because you've talked about a lot about obligations. So what are these fundamental tax obligations for SMEs? I think a lot of SMEs will want to hear that.
Okay, thank you very much for that question. So as this is an awareness program, I think the question is very fundamental to creating and educating business owners on their tax obligations. So I will approach the question from two angles. So the first is institution whereby they're operating their business through either a sole proprietorship or a partnership corporate vehicle. Right, so for those vehicles, they're taxed majorly from an income tax standpoint under the Personal Income Tax Act. Right, so these vehicles in themselves are not taxable, right? But the promoters and owners behind the businesses are taxable persons for income tax purposes, right? So if, for example, I own a business venture, right, I will be paying taxes under the Personal Income Tax Act. And under that act, I'm meant to file my returns once every year, right? And that is on or before the 31st March, right, of every year. So it's preceding year basis. So that means that the return I'll be filing in 31st March 2025 will be based on the profits I've made in 2024, right? So in that case, I will compute the taxes in line with the law with support of an advisor where applicable, and pay the taxes to the tax authority where I am tax resident. So residency is another key thing. So you need to know which tax authority kind of governs your tax residence. And that is usually based on law. I won't go technical, but it's where you are on a relevant day during the year, like the 1st of January. Right, so if I'm in Lagos on 1st of January, I would be paying my taxes to Lagos State Internal Revenue Service, right? And I will need to file my return on or before the 31st of March every year, right? The other thing again is if I'm an employer of labor, right, and I have employees, right? So to the extent that I pay the employees above minimum wage, right? So employees that earn minimum wage and below, right, are exempted from personal income tax. But if I pay my employees above minimum wage, then I need to ensure I deduct income tax from their payment under the pay as you earn scheme, right? So I deduct the taxes on a monthly basis and I remit to the tax authorities where the employees this time, and not myself, the principal, where the employees are tax residents. So if I'm a Lagos SME and I'm paying my employee, let's say 100,000 per month, right, and he's tax resident in Ogun State because he works in Lagos and lives in Ogun State, I will need to deduct the income tax under the pay as you earn scheme. I remit to the Ogun State Internal Revenue Service, right, on a monthly basis, right? So on or before the 31st of January, I will need to file a return to Ogun State Internal Revenue Service of my pay as you earn income tax returns, right? So that's pretty much on the individual and employee side of things. But if I'm a corporate vehicle, right, I would need to pay my income taxes under the Companies Income Tax Act. I will need to prepare the tax returns in line with Section 55 of the Act. I need to file on or before 6 months after my accounting year ends. So if my accounting year ends, once I've kept my records and I prepare my accounts and it's audited by an auditor, my year end is 31st of December, I need to file my corporate income tax on or before 30th of June, right, which is 6 months after my accounting year, which is 31st of December, right? And the tax returns that you'll be filing need not come with any tax liability, right? So one, if I'm loss making, right, there isn't any tax I'm paying, but I still need to file my returns. I earn revenue that is below 25 million, right? I'm under the threshold of paying taxes. I have no tax liability. I still need to file my return. So they still need to file returns. The other one I'll just touch on, there are many, but I think I'll just stop at this last one, which is the value added tax, right? And withholding tax. So for value added tax, the law has acknowledged the fact that SMEs need not be burdened by needless compliance obligations. So they have also maintained the same threshold of 25 million naira. So if you are an SME, either a sole proprietor, a partnership, or a company, and you are not making taxable supplies that is below 25 million, right, you don't have to file any VAT returns, right? But the moment you cross that threshold, you then need to file, right, VAT returns. Under the new withholding tax regulation, small companies are not required to deduct withholding tax, right? So you have no withholding tax obligation under the withholding tax regulation. So the tax system is being redesigned, right, to place less compliance burdens on small scale businesses, although they still need to file their income tax returns either under the Personal Income Tax Act or under the Corporate Income Tax Act. Thank you very much.
Thank you so much, Mr. Babatunde. Please, SMEs, always file your returns. It's very important. So my next question will be to you, Mr. Peter. And I would be asking you, how can small businesses simplify the process of filing taxes, and are there specific tax incentive or relief programs available for SMEs in Nigeria? And what are the penalties for non-compliance with tax laws, and how can they be avoided? Did you get my question, Mr. Peter?
Do you want to take the question again, especially the first part?
How can small businesses simplify the process of filing taxes? And are there specific tax incentives or relief programs available for SMEs in Nigeria? What are the penalties for non-compliance with tax laws, and how can they be avoided?
Okay, I think the first question is how can they simplify the process of filing their returns? To be honest, the work of simplification of tax compliance rests more with the tax authority and the government than with the taxpayer. And that is why you hear things like the ease of doing business. How easy can it be for a taxpayer to put in everything there? And what the Nigerian government has done is to try to ease how we do businesses in Nigeria, especially for SMEs. So when you look at SMEs, when Babatunde was speaking, he talked about how the government has tried to put out some compliance obligations away from SMEs so that they can focus on scaling their business. So we want, recently, one of the trending things you hear from the government is that we are not going to tax poverty. We're not going to tax seed. We're not going to tax capital. We want to tax profit.
Okay.
So you see the government saying, see, you're a small business. So since your turnover is less than 25 million, we do not even need you to register for VAT. We don't need you to file your VAT returns. Just wait. When your business goes up 25, then you can file. So some simplification basically is more on the government side and tax administration side than the taxpayer side. However, what the taxpayer also has to do is, when Babatunde was speaking, he talked about if you're an employer of labor, so it means you have to file your Form H1 returns on or before 31st of January annually. Now, if you're going to do that, one of the things you should do, again, goes back to documentation, record keeping. So you don't have to wait till 31st January to start looking for, where is the salary I paid for this person? Where is the evidence of PAYE, payee remittance that I've done, all of this. So you need to start early, anticipate. For me, the first thing you should do as a taxpayer to simplify your compliance is to have your compliance calendar. So have a compliance calendar. Map everything. So this is what I need to do. This is when I need to do it. This is the penalty for not doing it. This is who would do it for me. Do I have a compliance officer? Do I have an external person who will do it for me? To have a compliance calendar. So if you have these things sitting in front of you every time, it would help you to plan ahead and to get your documents ready and speak to who you need to speak in order to meet up with those compliance requirements. So that is for the answer I have to that. Then you asked, I think the second leg to your question was about reliefs and incentives. Yeah, there are quite a lot of reliefs and incentives, and if our audience were attentive enough, they would have picked a lot of it from Babatunde. So I don't think I want to go into that again. So there are reliefs. If you don't, one of the basic reliefs which is applicable to everybody is if you don't have profits, you wouldn't pay tax. Though we have minimum tax, for some people, but then for SMEs, there is no minimum tax. If you've not made profit, no tax to pay. I need to mention again, we talked about it previously. People should understand the entity concept of their business. Your business is different from you. Your business is different from you. So you cannot use your company's bank details. You cannot use your company's account number to pick funds from everywhere. So you can't say, oh yeah, my alumni association, we're having a meeting and I'm the financial secretary, please pay to this account. When all the monies have gone to that account, the tax authority comes back to say, please, can you reconcile your inflows in your corporate bank account with the returns you filed? You start saying a lot of things. So you should really avoid that, because that could take you above the threshold allowed for SMEs who, are allowed above the relief or incentive threshold to file certain returns and pay certain taxes. So please make sure you are safe on that side. So beyond that, every other thing Babatunde has said and every other person has said with regards to reliefs and incentives, I concur. Then penalties, it is quite unfortunate in practice that what we see is SMEs pay more penalties than the taxes that they would even pay normally, because SMEs don't have a lot of gains, a lot of profits in their businesses. But because they do not file their returns, somebody is coming to meet you 10 years after because he's gotten a letter from the tax authority, or because he's seen someone who wants to invest in the business, and you're trying to put everything together, you see that the penalties are way, way more than the taxes the person would have paid. So if you do not file, if you have employees and you do not file their returns, and you do not file their personal income tax returns from H1 returns on or before 31st every year, the penalty for late filing is 500,000 naira. I mean, I don't think SMEs want to pay that. As simple as submitting returns, and the returns are not quite complex things. So these are the people who've worked with me from January to December, from when they got employed till December. This is what they earned. This is what I paid them. And this is the taxes I remitted on their behalf if they earn above the minimum wage. And you also put in their projection too for the next year. So you can imagine when you pay 500,000 for something very simple, something you can even file on the 10th of January every year. And then if you also do not file your returns, even though you are a small company, but you do not file your CIT, corporate income tax returns, there is a penalty for not filing corporate income tax. I think it's 25,000 in the first instance, and then 5,000 for every month that default continues. Know that you're to file that return 6 months on or before 6 months after the end of your financial year. Then there's a penalty for not filing your VAT returns if you are above 25 million naira as an entity or as an SME. The penalty, it's about 50,000 naira in the first month and 25,000 naira for every month the default continues. Then if you also have profits on taxes that you've not paid, you would see the tax authority coming to say you need to pay these taxes and you're going to pay penalty at 10%, and then you pay interest at the prevailing market rate. So MPR is going up. So as MPR goes up, the FRS or the tax authority is also considering that as the as the interest on the money or revenue they should have gotten, and they will get that from you. So these are some of the penalties for non-compliance. Then when you spoke, you talked about the importance of having a professional help you with determining how to form your business. Because while forming your business, you also need to consider, do I need to form other businesses that would put us in a transfer pricing position, in a position where I have related parties. So remember, if you are in that position, the law says if you do not file your returns on or before 6 months from the end of your financial year, that is about the stiffest penalty now. So you have 10 million naira in the first instance. Maybe they would understand and probably forgive you or try to give you a discount, but the penalty is 10 million naira in the first instance, and then 10,000 naira for every day that default continues. So what is the capitalization of small businesses that they would have to pay that such penalty? So penalties are huge, and I encourage SMEs to comply. Thank you.
Thank you so much, Mr. Peter. My SMEs, please, I did not forget, if you have any questions you would like the speakers to ask, please kindly put it in the comment section so we can be asking our speakers. My next question will go to you, Mr. Collins. So I'll be asking you, Mr. Collins, can good tax practices attract potential investors or partners? And also, can SME, I'm asking you two in one question, so please, you just listen so you can answer.
All right, that's
the first
fine.
question is, can good tax practices attract potential investors or partners? And what triggers a tax audit for SMEs? And how can they prepare? Did you get my question?
Yes, I did. Okay, so good tax practices, let me put it this way. Bad tax practices will deter investors. So good tax practices may not necessarily attract investors. The fact that you pay your tax may not make your business attractive to them. So it's not, I won't say because you pay your tax, investors will come to you. No. However, investors would run away from you if they wanted to come, if you have tax issues, because most investors, either local or foreign, don't want tax liabilities, because it can be embarrassing when they publish their names on media, on the news, or sell their premises and all that. So especially the big investors, because I know that, for example, when you go to some SMEs, you see where they put notice of non-compliance and they don't care. However, large corporates take that very, very big. They wouldn't want any issue of non-compliance. Large corporates, both local and abroad. And when you talk of investors, you are looking at big people coming to invest in your business. So if you want to attract them, if you want them to find your business worthy of investing, you need to put your house in order. However, I need to put the caveat that because I pay my taxes does not mean that foreign investors will come to me. Do you understand? If my business is not attractive to them, they won't come. But they would come. When they come and see that I'm owing tax, they will run away. If they come and they see I'm tax compliant, it will make them even more interested in my business. I don't know if that makes sense.
Yes, it does.
Yeah, so I mean, it's just like saying opportunities, luck is when opportunity meets preparedness. So you need to prepare yourself for the investors to come, and you have nothing to deter them. Yeah, so putting your house in order in terms of taxes is one of the things you need to do to get them, to make it attractive to them when they come. Yeah, and the second question is what triggers an audit? Let me say that audit is statutory. The taxman generally do not believe what we've presented to them, so they would always come for an audit. So even if you don't do anything, they will still come and audit you, as long as you have registered for tax. Now, when we say trigger an audit, it could be that if they are not comfortable with what you are filing, they see that there are some disparities in your returns, then they can say, let's go and audit this person. Or more so, there can be an investigation. There's a difference between a tax audit and a tax investigation. Tax audit is a routine exercise that they carry out. They don't come to audit people yearly. Some before, they used to wait every 3 years or 2 years. They don't come yearly because they need to be able to audit like 2-3 people. I don't think they have enough personnel to audit all the companies every year. So they will always come and audit your business. However, something could trigger an investigation, which will take the audit further to say, there's something not adding up in the records these guys have presented to us. Let's investigate further. Now, when they go for investigation, it's a bit more deeper than audit. Audit is routine. You give them your bank statement, they ask, but for investigation, they could start writing all your partners and say they are carrying out an investigation. What was the purpose of making these payments? The investigation kind of has no barrier compared to doing the audits. So I would like to say the audit is routine and it's statutory. They would always audit you every 2 years or 3 years. Investigation, not really, except something triggers it. So yeah, I don't know. Yeah, so they will always come to audit you. Just be ready. Just be prepared. Boy Scouts, be prepared. Anytime they will come and audit you. Yeah, but if the analysis unusual items, they can move it further to an investigation.
Thank you so much, Mr. Paul.
You're welcome.
Our next question will be going to Mr. Uyi. Mr. Uyi, are you here? So I'm going to be asking you these questions, and I want you to quickly answer me so that we can. So you've talked about proper record bookkeeping, right? So what role does proper record bookkeeping play in claiming tax deductions? And also, can SME reduce their tax payment? Can SME reduce their tax liabilities without breaking the law? If so, how can they do it? Because they want to hear that. And also, how does the taxation of the digital business differ from the traditional SMEs?
Yeah, I'll start from the last, right? Okay. Digital tax is tax. Taxation is just paying what your obligations are to the states, right? While the modus operandi for digital taxation may be different from the normal one, but everyone is even digitizing. So, for instance, payee now is paid online. You could pay payee online and all that. What the challenge is presently is determining the quantum and how to tax businesses in the digital space, especially when it's not as if they are geographically located in certain locations. But that's really not even an SME problem right now. So let's look at the other two aspects, which is one, keeping records. I think Collins had spoken very deeply on record keeping, right? And the expectations from the law that businesses must keep record. For audit purposes, for instance, for due diligence, for investigative purposes, your records show your track record. The absence of records is a major red flag that destroys business credibility. So from a legal standpoint, you must ensure that you keep records and keep the right records, right? And also, so what also happens is that during a tax audit, where you have records, those records oftentimes help the business owner to mitigate his tax burden and tax responsibility. Because, for instance, you are able to explain certain transactions, you're able to show proof of certain inflows and able to defend some assertions that you have made that these are not taxable incomes. If you don't have records, they will just do what they call self-analysis, right? They will analyze based on their own records and estimations and based on what they see without your explanation and give you a ballpark figure. Records are the proof to dispute, correct, clarify, and defend yourself in instances like that. Records also show good corporate governance practice, show that you are building a business to be sustainable, right? And if you don't have records, then you are not able to show sustainability. You are not able to show proof of your growth trajectory. So it's really a no-brainer. Sales, employment, contracts, documentation, everything. So I always advise founders, startup founders, right, who are people I deal with, to have what we call a data room. A data room is broken into 4 key components. First component is your legal structure, your incorporation, trademarks, and the likes, right? The second has to do with your internal framework, employee handbooks, human resource manual, corporate governance framework, board charter, board structure, and all the likes that have to do with your internal organizational framework, your standard operating procedures and the like. Third has to do with your external relationship trajectory, MOUs, partnership agreements, SLAs, and all the likes, right? All those documentations and all that. And then the fourth has to do with your financials, your account statements, your banks, your inflows, your invoice structure, payments, deliverables, debit notes, credit notes, and all that. Now, this data room is the foundation, the home upon which you leverage all your documentation. And for instance, if you are a business that is looking for investors, the first thing investors want to see is your data room. If you don't have a data room, it's a red flag. Nobody will invest in you. So records are important. What was the second question again?
The last question.
Hmm.
So I said you've answered how they can reduce their tax. You've answered how tax considerations unique to hold on, please. Your last question should be you've answered the taxation of digital businesses, you've answered book record keeping, and the other one is how can they reduce their tax liabilities without breaking the law?
Yeah, so I spoke to it and I said, look, there's something called tax avoidance. Tax avoidance is legal. Tax evasion is not. Many SMEs are tilting largely towards tax evasion instead of tax avoidance. Tax avoidance means mitigating your structure in a way that reduces your tax obligation. So for instance, you are ensuring that your structure is not one that will require you to pay certain taxes, right? Two, you are ensuring that your manpower, that's, earlier I spoke about digitizing your service delivery framework, right? When you reduce your employees, you also reduce your payee body, right? You also reduce your payee body. And then also, there are certain lines of businesses that entitle you to certain rebates. There's something called pioneer status, for instance. There's certain businesses you do, and you qualify for certain tax rebates and tax incentives. Under the Startup Act, for instance, there is the Act is in line with the Finance Act that provides these leeways for support. But then it also has pioneer status provisions. It also has certain
Mr. Uyi. Hello, Mr. Uyi, can you hear? I think your network is bad.
Your structure, create your objectives are the important things when you can how to mitigate, right, your tax obligation. How many people are you employing? What is the need of the people you're employing? And then can you leverage on technology, minimize, this? Now, inflows into your bank accounts, right? How are you collecting money? How are you receiving money? How are you paying money? And then what structures are in place? For instance, if you are in a service business or a delivery business where you are charging value-added tax, or you're charging consumption tax and all these things. Now, what are the measures in place to ensure that as this money is coming, you're remitting straight? Oftentimes what a lot of businesses do is that they lump all these monies together. And so it now becomes a lot when you now want to start remitting. But there are measures in place where, as soon as the customer pays, everything is delineated in such a way that you're able to immediately, remit what goes to government as VAT or as consumption tax, and then what comes to you as a business. It's all a product of discipline and, intentional thinking. Yeah, I think I'm done.
Okay, thank you, Mr. Uyi. We have one question on ground, and the question says, I'm just going to read it out to everyone so each speaker can just answer. Can you hear me? Please, can you hear me?
Yes, we can.
Yes, this question says, how do international tax treaties or agreements impact Nigeria SMEs with cross-border operations? Wow, that's a nice question. Did you get that? How do international tax treaties or agreements impact Nigeria SMEs with cross-border operations? Mr. Babatunde, please answer that.
Yeah, thank you very much, Esther, for the question. So, as I said in my presentation, right, SMEs currently operate in the current unique environment, which is a globalized one, right? And at least from an African standpoint, you would find situations whereby um, leveraging on the AFCFTA, that's the Africa Continental Free Trade Agreement, Africa governments are trying to integrate the markets, right? So that SMEs can have access towards other markets and pretty much scale and expand their business. So when they say international tax is really the interaction between the Nigerian tax system and the counterparty tax system, which is the market where the SME is playing. So if, for example, there's an SME that is selling goods from Nigeria to Ghana, right? So international tax really, as to apply to that transaction, is how does the Nigerian tax system treat that transaction, and how does the Ghanaian tax treatment system treat that transaction, right? And we see that to the extent that the SMEs are having cross-border transactions, it's very imperative that they engage, right? Because not only would you need the knowledge of the Nigerian tax system, you also need knowledge of the Ghanaian tax system, right? So that you can understand your compliance obligations, right, both in Nigeria and in Ghana, right? So that you ensure that from a compliance standpoint, you are on top of it, and also from an incentive standpoint, you are maximizing the incentives applicable to optimize your transaction, right? And now imagine if you then have access to multiple markets beyond Ghana, right? And even in Europe, then at that point in time, you need definitely need sophistication support, because there are transactions taxes that will then apply. And one of the other interactions that could also happen to SMEs, right, is not only on who you sell to, right, in terms of where your revenue is coming from, right? You could also have international vendors or suppliers within your supply chain as well, right? So you could have foreign suppliers, either in terms of goods or in services, and those services can actually be digital, right? So you could have the likes of Google, Facebook, and all these other foreign digital companies, part of your vendor as well, right? So that in itself too has tax implications around what happens to withholding tax, what happens to VAT on those transactions, who has the responsibility to account for the VAT, who has the responsibility to file VAT returns, which could either be on the companies that are supplying services or yourselves, right? So all these things are very much important in terms of how it affects both your revenue side of the transaction and also on your cost side of the transactions. And one of the fundamental things that came through from your question is in terms of international tax treaties, right? So Nigeria, unlike other emerging markets, does not have a lot in terms of double tax treaty network. I think we just have about 16 treaties that are currently in force, even though there is an ECOWAS tax treaties that covers, I think, the 15 to 16 countries that are within ECOWAS, but currently that is not yet in force yet, even though it has been ratified in Nigeria. It has not been ratified in the other ECOWAS countries, right? So international tax treaties pretty much work to ensure that you avoid double taxation. So if you pay tax, let's say if you have earned profits from South Africa, for example, Nigeria has a double tax treaty with South Africa, right? Those profits, if you pay tax in South Africa and you have to pay tax on those same profits in Nigeria, the treaty can give you some form of a relief, right? In terms of giving you some deduction of credits for the taxes that you paid in South Africa as well. And the other thing about treaties again is that it can also help to avoid double non-taxation, right? Because governments as well do not want tax evasion, where you generate profits that is not taxed in either jurisdiction as a result of the interaction between the tax system you have in your country, Nigeria, and the other tax system that is at play, where that is covered by the double tax treaty, right? So once you start to go cross-border, right, I think the level of sophistication is at a level where you need to engage advisors to pretty much support you through that process.
Thank you so much, Mr. Babatunde. So each speaker is going to be answering this question. And while you're answering this question, please just say a final note to all SMEs, what you want them to do. But before I come on other speakers, I'd like to tell you, all SMEs, that Business Day Nigeria has an SME conference and award coming up on Friday, the 6th of December at the stable. We would want all SMEs to be in attendance. And if you know any SME that is due for an award, that you see this person is working so hard and deserves an award, Business Day is awarding every SME, well, awarding the top 100 SMEs. And we do that every year. This year we have, it's on Friday, the 6th of December at the stable. And wouldn't mind if any of our speakers would want to be a sponsor to help us reward all these SMEs, because in this TPAID area, they are going through a lot, and we just need to tell them, we'll see what you're doing, we know you're doing well, and we want to award them so that they can be encouraged to move further rather than close their businesses. Thank you so much. So if you need more clarity on that, you can just go to any of our Business Day social media page, go to Business Day on Instagram, Business Day on Facebook, Business Day on LinkedIn, and you're going to get every information. Or better still, you can still reach out to me, Esther. I'll just be dropping my phone number after this event and we can talk about it. Thank you so much, Mr. Babatunde, once again. Mr. Collins, would you like to answer this? And please say your final note to the SMEs.
Okay.
Mr. Collins.
Yes, I'm here. I had the final note, but I didn't quite get the question.
Okay, so the question is, how do international tax treaties or agreements impact Nigeria SMEs with cross-border operations?
That's a tough one. I don't know. So to be honest, I would, for SMEs doing international transactions, I would recommend they get a consultant. It's not something you can handle. It's not something they will be able to handle in-house, because there are countries where we have double taxation treaties. There are countries where we don't. There are countries where they withhold tax and all that. Then there are also rules that guide export proceeds. Yeah, there are VAT implications. For example, exported services are exempted from VAT. The last I checked in the Finance Act, it has been changed. So it's a whole lot of complex scenario when it comes to export. So if an SME now gets to export, my top recommendation is to hire an expert to help them handle all that and not listen. Because I recall one of my I had a friend that is a fintech. They have an entity in the US, and they had something similar. And the tax consultant in the US. So initially they were trying to cut costs, but eventually they had to spend a lot more because the tax consultant in the US needed a lot of clarification. They now had to hire somebody from Nigeria to step in and salvage the situation, which if they had done the right thing from the beginning, they probably wouldn't have found themselves in that mess. And there are also people that, like I tell people that a lot of fintechs in Swiss, when they are all expanding, we have an office in Ghana, Kenya, how are you managing your taxes in those places? How are you ensuring that your filings are up to date? Your audited financial statements are up to date there. So you can't use a Nigerian accountant to audit a company outside Nigeria. It's not going to work. So there are a lot of implications when you want to do things outside your territory. My best advice would be to get a consultant. And on a closing note, I would say we would always pay tax one way or the other. The goal is to minimize the tax we pay. And the only way you can do that is if you start from the planning phase. When you have the right foundation, you can plan it better. I mean, you won't evade tax, but you can avoid some taxes. And that's why you need consultants. There are people that all they do when they wake up is to think about how to manage taxes for people. They know even before the laws are signed, they already know what the law is, they already know what the implication will be. So you need to be willing to pay for such services to get the best Because at the end of the day, like I always say, the cost of non-compliance is always more than the cost of complying. So taxes are not that bad. Let's forget about whether it's well utilized or not. That's a different conversation. We all have to pay. Let's ensure that we do the right thing from the beginning. Yeah, I think that will be my closing remark.
Thank you so much, Mr. Collins.
You're welcome.
Mr. Uyi. Mr. Uyi, are you here? Okay, if it's not here, can we have Mr. Peter? Mr. Peter.
Right. Thank you. I'm almost tempted to say that I wouldn't give an answer to the question because Batunde and Collins have given answers to it. Because the thing about, and I'm not sure exactly what the person who's asked the question wants to hear. I guess there is a bit of context that might be missing because we need to be specific about the particular treaty. I think as of today, we have about 16 ratified treaties. I'm not so sure about 16 to 19, if I'm not mistaken, ratified treaties. So we need to be sure that we're talking about a country that we have a treaty with, and we also need to be looking at what kind of treaty do we have with this country. Is it a comprehensive tax treaty or special or specific treaties? So that is it. But when you go to treaties, because a lot of these treaties are modeled from the international documents, the OECD conventions and all that, there are general clauses and all that. So what treaty does is that it's part of what it does, not that's what it does, part of what it does is that it tries to define who has taxing right. So if you're who has taxing right, so if you're operating in a country that has a treaty with Nigeria, an avoidance of double tax treaty with Nigeria, we want to know who should have a taxing right when it's on a certain type of income, maybe interest income, royalties, or all of those income or dividends, we should have a taxing right in that case. It also defines other things, right? So there are several articles in double tax treaties. So I really wish to understand if that is what the person wants to know, or if the person is also asking, just like we talked about, is it we or Collins talked about when you're operating, people are opening up subsidiaries and branches in different countries in Kenya and all of that, because we've seen a lot of SMEs, especially the ones in the financial technology sector, set up in Nigeria and eventually set up a holding in the US, especially in Delaware, maybe for financing reasons. And then you see them expanding across or towards East Africa, in Kenya, in Rwanda, and sometimes in South Africa. So that's what we see people do. So except they want to know the other international rules, international tax rules, or the international tax implication of such expansion, which is not just about tax treaty. So I may not be able to answer all of that question. So, but if you ask me my final words, I have two. Number one is that we are rooting for SMEs because clearly the Nigerian government cannot provide jobs for everyone. So the SMEs have been, I think they've been the biggest set of people who have kept our economy in shape, who have ensured that this economy does not crumble. So we are rooting for you. It is not easy to do business in Nigeria, to survive in Nigeria. So we want you to move from being SMEs to becoming large companies, to becoming incorporated companies that are in the stock exchange, to even becoming multinational companies. We want to have more unicorns from Nigeria. So yeah, we are rooting for you. The second thing is that I agree, please pay your taxes. I am an advocate of holding the government because when you go down the street, we see a lot of people who are poor. And I say Nigeria has no business with poverty, should have no business with poverty. And the way I see it is, I feel so passionate about it. I feel bad about it because I know how much I pay as tax. So I feel that if a lot of us pay the right amount of taxes that we should pay, then when the government says, oh, someone says I want to get into power, someone says I want to do this, you hold them by their words. You've said you're going to do this. Have you done it? Or I'm in Lagos, but there are no street lights. Why are there no street lights? Who should I hold accountable? Is it the local government chairman? Is it the governor? Is it the president? So I feel that if we are compliant enough, we would know, if you know how much you pay as tax on a monthly basis, you would really push to hold the government more accountable. So yeah, pay taxes, because that would fuel your citizenship obligations and citizenship rights here in Nigeria. But we are rooting for you, most importantly. Thank you very much.
Thank you so much, Mr. Peter. Mr. Uyi, are you back online? So if we don't have Mr. Uyi, I would like to say thank you so much to all our speakers. Thank you to all our participants. It was really, really an enlightening topic. I guess SMEs already know a lot. And so kindly drop how they can contact you after this, because 2 hours is not enough for them to know all they need to do. So if you can just drop how they can reach you, what they can reach you on, maybe on social media, on LinkedIn, on Instagram, on Facebook, anything they can reach you on, you can just drop it, because at the end of this, a lot of people will be coming back to watch it by YouTube. So that way they can get to reach you and ask you any further question they want to ask you. So just drop your details in the comment section. Thank you so much. I really want to say thank you, Mr. Peter. Thank you, Mr. Babatunde. Thank you, Mr. Collins. Thank you, Mr. Uyi. Thank you for answering Business Day call. We really appreciate you. I will hope to see you on our SME Award coming up on the 6th of December on Friday. And to everyone that wants to be a participant, please just go to any of Business Day platform and just drop a message. Someone will reach out to you. Thank you very much, everyone. And it was nice having you all on ground. Till next time, it's your girl again, Esther from Business Day. Thank you once again. We really appreciate you. Have a nice day, everyone.
All right. Thank you. And have a nice day, everyone.
Thank you, Esther. Bye.
Yeah, bye. Thank you,
Bye.
Esther. Thank you,
Yeah,
everyone.
thanks so much. Yeah.
Thank you. Bye.
Thank you.